You've probably seen the promise floating around online: just buy SCHD and live off dividends. And the goal sounds amazing: $5,000 a month landing in your account like clockwork without selling shares. But the big question is, how much do you actually need invested in SCHD to make that happen? Because the answer is, it depends. And today I'm going to show you the math, the reality, and the common mistakes people make when they chase dividend income. Quick disclaimer: I'm not a financial advisor. This is for education and entertainment, and I'm using rough estimates. Always do your own research and consider taxes, your risk tolerance, and your total plan. Let's start simple. $5,000 per month is $60,000 per year. So what we're really asking is, how big of a portfolio do I need to generate $60,000 a year in dividends from SCHD? Now, SCHD's dividend yield moves around based on price and payouts, but it's typically somewhere around the 3 to 4% range most of the time. So I'm going to run 3 scenarios so you can see the range. 3% yield, conservative; 3.5% yield, middle; 4% yield, optimistic. And here's the basic formula. Portfolio needed equals annual income goal divided by dividend yield. Scenario A, 3% yield. 60,000 divided by 0.03 equals $2 million. So at a 3% yield, you need $2 million invested to get $60K a year in dividends. Scenario B, 3.5% yield. 60,000 divided by 0.035 equals $1,714,285. Call it about $1.7 million. Scenario C, 4% yield. 60,000 divided by 0.04 equals $1,500,000. So even in a more generous yield scenario, you're looking at about $1.5 million invested. That's the number most people don't want to hear because it's not flashy, but it's honest. Now, here's where it gets real world. When people say they want $5,000 per month, they usually mean $5,000 per month to spend, not $5,000 showing up before taxes. Dividends in a taxable brokerage account can be taxed. Many SCHD dividends are typically qualified, which may get better tax treatment, but your tax rate depends on your income, filing status, and your overall situation. So let's do a simple, rough example. If your effective tax hit on dividends is 15% and you want $60,000 after tax, you might need closer to $60,000 divided by 1 minus 0.15 equals $70,588 pre-tax income. Now rerun the math with $70,588 instead of $60K. At 3%, $70,588 divided by 0.03 equals $2.35 million. At 3.5%, approximately $2.02 million. At 4%, approximately $1.76 million. So taxes can turn "I need $1.5 million" into "I need closer to $2 million," depending on yield and your tax situation. And by the way, if you're planning this inside a Roth IRA, the tax story can look very different later on. But Roth accounts have contribution limits and rules, so it's not as simple as just put $2 million in a Roth. Here's another thing that trips people up. Dividend income is not a salary. Companies can raise dividends, cut dividends, pause dividends, or reshuffle payouts. SCHD is diversified, and historically it's been built around quality dividend companies, but it's still the stock market. Also, even if your dividend per share stays steady, the yield you see online changes because SCHD's price moves. So if you build your entire lifestyle on exactly $5,000 every month, you might be setting yourself up for stress. A smarter way is to aim for a buffer. If you need $5,000 per month to live, you might target something like $5,500 or $6,000 per month in dividend capacity, so you have breathing room for taxes, market swings, or a year where dividend growth slows. Now, let's talk about the question everyone asks right after. Okay, so how long does it take to reach $1.5 million to $2 million? That depends on how much you invest every month, your total return, dividends plus growth, and how consistent you are. Let's do a realistic example. Say you invest $1,500 per month, and let's say your long-term average total return is 8% per year. Not guaranteed, just a reasonable long-term estimate people use for broad stock investing. At that pace, you're not hitting 1.7 million in 5 years. This is a 10 to 25-year kind of goal, depending on income, savings rate, and markets. But here's the hopeful part. Most people don't start at $1,500 per month forever. Your income grows, your skills grow, your investing habits grow, and the portfolio starts compounding hard once you get into the six figures, then the mid-six figures. A lot of people get discouraged because the first 100K feels painfully slow, but the first 100K is the training montage. The compounding really starts to show up later. Let me hit you with the biggest mistake I see. People want $5,000 per month and they start hunting for the highest yield possible. They end up in risky stuff, yield traps, dividend cutters, or ultra-high yield funds that look good until the price drops and the dividend gets slashed. SCHD is popular because it focuses more on quality dividends, not just high yield. But even then, don't treat it like a magic money machine. A better mindset is, I'm building a portfolio that can produce income and grow over time. Because if your portfolio grows, your dividends can grow too, and you're not stuck needing a perfect yield forever. So let's summarize the honest answer, because this is where a lot of videos get a little too hypey. If your goal is $5,000 a month from SCHD dividends, that's $60,000 a year in income. And depending on what SCHD is yielding at the time and whether you're paying taxes on those dividends, you're realistically looking at something like 1.5 million on the low end and closer to 2 million or even a bit more if you want that income to feel consistent and spendable. And I know hearing you need 1.7 million doesn't sound exciting, but honestly, I think this is empowering because it turns the dream into a plan. Instead of guessing, now you know the target. Now here's the part people forget. Dividend income is not supposed to be built overnight. It's built over years of consistent investing, and it usually looks boring in the beginning. Your first few months, you might get like $8, $20, $50 in dividends, and it feels like nothing. But once the portfolio gets larger, it starts stacking faster than you expect, especially when you reinvest and let the dividend growth do its thing. Also, don't get trapped in the idea that it has to be SCHD only. SCHD can be a strong piece of a dividend strategy, but most people who live off investments aren't doing it from one ETF. They usually build it like a system, maybe a dividend ETF bucket for income, a growth ETF bucket to keep the portfolio expanding, and sometimes even a cash or bond bucket for stability. That way, you're not forced to depend on one yield number staying perfect forever. And one more thing, this is important. If you're trying to live off dividend income, you need to think about inflation, because $5,000 today won't feel the same 10 years from now. So ideally, you want income that can grow over time. That's why dividend growth matters and why quality holdings matter. The goal isn't just high yield. The goal is reliable and growing income. So if you're watching this and you're like, okay, Sarah, I'm not at 1.5 million yet. What should I do right now? Here's the practical takeaway. Focus on your savings rate, automate your investing, reinvest dividends while you're building, and measure progress in milestones. First 10K, then 50K, then 100K. Because once you cross those levels, compounding starts to get way more noticeable. If you want, in the next video, I can show you a simple roadmap for this, like how to structure a basic ETF portfolio around dividend income, how taxes might change the strategy depending on whether you're using a brokerage account or retirement account, and how to plan for $1,000 a month first, then $2,500 a month, then $5,000 a month. If this helped, hit like, subscribe, and comment SCHD, and tell me your monthly dividend goal. Is it $500, $1,000, $5,000? And if you want me to do the math for your number, comment your goal and I'll pin a reply with a rough estimate of how much you'd need invested.